Welcome for take 2. We had a lot of technical problems earlier. Kind of what happens when you try to get into the metaverse at times. We've got the glorious Madavi here. And the gorgeous Johnny from the metaverse, who is going to leave us really quickly. He keeps having discussions on the way to Cancun with Mrs. Meta. So, anyway, we were going to bring you this live while we're trading Roblox and Upstart earnings in Airbnb. The futures got really hectic at the end, trying to move between the stock and the platform. Obviously, stuffed something up with Discord. So, apologise to that for those that are looking forward to it. I'm not sure how many were.
Make it up another day.
Yeah, we will make that another day. We're actually jerry-rigging this podcast. So we're not going through the normal room situation. So we'll see. Hopefully it comes out good. Anyway, let's go through the stocks first rather than the markets that we were trading. So we know the S&P, just real briefly, finished up strongly today. And the reasons why, we'll go through that separately. Okay, the first thing we traded after the market was Roblox, which came out with earnings that disappointed. We were going to trade these, but we'll go through what we actually did and why. Let me find Roblox earnings here. I had this all ready to go, and we're all an hour later fixing all the technology. Do we hate technology? I think we might. So anyway, after earnings, Roblox was hit pretty hard. I just saw someone sent me their PE ratio. It's principally down minus 102%. Now, a lot of people are of the belief this stock would make money because they do have a good revenue base, but obviously they don't. So as far as earnings, after hours, TOST is down 13.8%. That's another dribbler special. Roblox down 13.5%. Zoom. So you can see there's a pattern with all these dribblers just getting whacked, Madavi. Zoom Info ZI or ZI down 7.9%. VIAC down 3.3%. PACB down 2.8%. Win, which is the Wynyard, is down 2.7%. Akamai is down 1.5%. On the top side was Upstart. Upstart was strong on their earnings. Strong beat, even though they lose a crap load of money. You want a dribbler special, that's another one. So that's this week, as someone opined earlier. So a lot of these sort of stocks are out this week. Airbnb was the other one. But Upstart was a pretty incredible move. Their revenues were $304 million. That's why it's hot, versus 262. And it's up about 33% after close was up, right? Pretty impressive, Madavi, right? And so, yeah, if you're wondering what we're talking about, they talk about dribbler stocks, etc., and punter stocks. Well, let's go through the most talked about stocks on Wall Street bets. Roblox was the top one with 249 mentions. Upstart 59. Airbnb 42. Nvidia 29. Spiders, GME, Facebook, QQQs, PPPI, and AMD. Okay, let's go through. You there, Madav? Let's see what's going on here.
Yeah, right here.
Yeah. Okay, so hopefully you can hear everyone today.
Upstart again. I shorted Upstart at 140 again.
Okay, so let's go through Upstart first. So Upstart came out with a big beat. There was a lot of, from what I understand, so the earnings came out, and there was a lot of orders, electronic orders. Orders came in at over 120. So I was actually Roblox at the time and then trying to deal with this tech stuff. So if we have problems again, I'll give you a little tip. We do all this for nothing. We're not going to be charging. So those sort of situations, we got to concentrate on the trading. So Apologise for that. I'm sure everyone understands. As I've said a million times, I don't know how people, when they're trading, can be all over Twitter in the middle of the day, right? I mean, we can...
They're called they're fountain traders.
Right, yeah, exactly. If you, as in Australia, they'd say if you're fair dinkum or not. So anyway, from what I understand, it bounced 120. Madavi traded this. So do you want to walk us through on Upstart there? I got the 30-second chart up.
When I got in, by the time I got into it and everything, it was up 50 points. I shorted it at 149, and I wrote it down to about 142, and then I got out, and I just seen it going back down, and I shorted it at 140 again. I'm shorting it to see how it goes, you know?
Right. So, yeah, I see there's a few guys that buddies of ours were, they bought this on automated systems. I don't know where they got filled, but I was told when it broke 120, so I don't, we don't know, and we were trying to get this live thing going. So I hope there's people watching us.
Move on it.
Yeah, and it was already up pretty good, right? So...
I guess, yeah. I mean, well, I shorted a couple hundred shares one time on it, and the thing ran up 100 points or something.
Oh, back in the day, yeah, I remember that one. Yeah, that was a swing.
Yeah, I listened to a dribbler.
Yeah, that was a dribbler event right there.
That's another, so I did small shares.
Right.
Run this much.
So we got up here the weekly charts. You can see it all. So you can see where they got 120 from. Was this high? So it's gone over, and now we're trading up at 140 even. See this? So that's your weekly, your daily. It also broke this tanking. So you can see where the reason a lot of Novawave works is we kind of spend our time trying to work out what the algos are using on certain instruments, right? And that's very important. Because at the end of the day, that's what, 85% of the market, I reckon? Don't you think, Madami?
Yeah.
I mean, it's a big chunk of the market.
I mean, are you going to buy? I just wonder. Upstart's a low floating stock, so they push it into the aftermarkets. They're thin, so they can get away up there, and they can even get it a lot higher. But I mean, man, it's just in these types of markets. I don't know if it's what once was when it was running. In the old, I guess 2 months ago's time.
Right, yeah. Look at the charts. This was 400. It had that big gap down 320 when it missed. Went down 240. And it looks like it got all the way down here to 73. Wow. So we're basically doubled that low today. I mean, the high here was 149. So the bloke I'm talking about bought, I mean, I had his levels here, but he started taking profit in here, and it just kept going. So you can see here, Madava's short's working pretty well here. So we got a 1 hour chart up in the 30 seconds. So that's Upstart. Let's go through Roblox real quick. So Roblox came out, as we said, missed. So this is a stock that kind of a lot of different categories are in. Obviously, it has dribble or appeal, right? Roblox, all that, as it said, Wall Street bets. But this was one that a lot of investors got in because a lot of it, to be honest, is because they got kids in it, right? That's how I knew about it, for example. And so we did the IPO and we made good money on it. But so there's investors in it for that reason, because of its space. A lot of people got out of it after, which was a wise move, obviously, looking where it is on COVID. But then it attracted the dribbler and the punter a lot after the Meta thing. That was its big move. You can probably see that. That was the Metaverse move. Which one was it? When did Metaverse happen? Yeah, that would have been this move.
Okay, the Roblox, what happened is I got into Roblox when earnings started coming out, started ripping down, and I got short at it for my first play at around 170. and I covered it.
Hang on, Roblox. No, Roblox. No, you're thinking of Airbnb. Roblox was.
Sorry about that.
Yeah.
At 70, I got short. I got short at 70 when earnings came out, and I covered at 62.
Yeah, that was so I only did the buy on this because I was trying to get us live. I kind of stuffed it up.
Yeah, I got long at 62.18 and 62.75, and I got out once, and then I got back in at 63.9.
Yeah.
70, I got short, I'm working right now. I got short at 70 when earnings came out, and I covered at 62. So I want to see if this thing, they're going to have the conference call on it, and a lot of times they push this thing up, maybe back to the 70 levels. I want to see if that'll happen today. So I made a little bit of money on it, so I can take some risk holding it, and for a better amount.
Yeah. That's a nice. The trade I did on it was when we were trying to do it. I actually got long after, just down here, at 60.72 and spun it out at 64.05 in this little scalp. And then I missed all this, all these technical issues. So we won't be doing that again, my friend.
Oh, yeah. Then I did Airbnb, too.
Yeah, and so Airbnb, let's have a look. So you can see what we traded off on those charts. We used the Murray math more than anything, right? You can see what it got down to, minus 2.8. That's why I bought it. And so they're not just random numbers. And if you're watching the order flow, and basically what you're watching is the algos chase things up and down, and when they run down. So here's Airbnb. Let me bring up the short-term one.
Yeah. So I got it really late on that, and just for the hell of it, I seen, hey, if this Upstart be up 50 points, maybe this thing at 19, 20 points, it could go higher. So better by judgment, I bought some at 191, and then I bought it, took another hit at 189, and I bought some more at 187, and I got stopped out at 187.50.
Oh, okay. I see. Yeah, so it flew up. So I completely missed this one. It flew up to 179, up to 194, and it come down to 186, and then it's gone. I can see its volatility. It's got a big pennant here. As far as the lows were, there's a 30-second chart, so let's go a little bit more. So you can see what it did today after earnings. So everything was bulled up. So as you know, with the market today, when we look at the indexes, it's pretty clear why a lot of these things went up. And if we look at let's look at a weekly real quick on Airbnb.
The thing with Airbnb, I should have got into it earlier. The things never miss their earnings. For a short life to that, there's always beat earnings or always the stock was up.
I did remember reading that, yeah.
Yeah, so a lot of people see that and they follow these patterns. So that's a pattern of that stock. So that's why.
Right. Until they don't, of course, then you get like that Upstart one we looked at. But
Yeah. Well, until that happens, you keep the trend going until it breaks, right?
Right. 100%. And you can see that on this spot. Well, these stocks really got hit off with the Nasdaq and everything, as you'd expect. But what's noticeable over the last few days, and actually when we talk about the futures, where if you recall last night we bought just before the close we bought a bunch of Russell or IWM to be specific calls, 205s, because that's the index that's been doing the best right out of them, and we're losing money on puts. Remember that? So the other thing was we had a specific view about the Ukraine, having people there, experience, and it worked out exactly as we expected. So we did really well there, obviously. And we'll go talk about that again later. But, we see the dribbler exchanges on TwinFit and or what do we call it? FibTwit, right? And we see, different stuff around, and do your best and just ignore them. It's going to stuff up your head. Don't do this, don't negative this and that. Have a plan, have your levels, and be expecting extreme volatility is you lower your size. Listen to what the people that have really been successful over their careers in the fast markets, the futures and all that. If it doesn't have the liquidity, you don't trade it, right? We only trade these stocks that we're talking about right now when liquidity comes in after earnings. That's it. But through the day, we trade pretty thick instruments, NASDAQ futures, S&P futures. We're traders. It's the bottom line, right?
Remember, there's a difference between traders and guys who tweet. You know, guys
Right.
a million tweets a night, they're not traders.
I mean, it's the same as CNBC, right? And so I retweeted something today of it was a list of all these analysts that caught all this stuff out in 2008, right? And they knew the subprime was going on. And some of those names are familiar. They're on CNBC. People forget or they redo it. But the bottom line, they're just analysts. They're not traders. They don't have the pain of it. Now, a lot of people, on the other hand, on the same thing as we've warned many times, on this run-up since it collapsed after COVID hit and then the Fed had to come in and bounce it. It wasn't a bloody correction to start with. That was a full-on bear market collapse. Just because it happened fast and short doesn't mean it's not a wipeout. It wasn't a bloody correction. End of story. People say that. I mean, it drives me gears because it's just not factually correct. So it traded as all that. Now, those who understand Elliott get exactly what I'm talking about. Anyway, what that does, and like every kind of manic move, we've seen a few of them, the internet bubbles and all these different bubbles, and anyone's traded commodities, is it emboldens people believing they're a trader, basically, right? I mean, a successful trader, because they're sick returns. And we're not going to make them because we just don't hold stuff like that, right? I mean, it's against every rule in the book. So what happens is, so they're all in glory, then they reinvent themselves, and they come back, and unfortunately people hang their head on it and forgive them because, they couldn't control it. Well, you can control it. For a start, you can be out of those instruments. That's why we look at waves, right? But yeah, 100%. And it takes full-on concentration, particularly when there's news bombs like today, which we saw a number of times. Like, let's go through. So I think we covered that, but I get a lot of DMs about this. We have a lot of people come on the forum, and so if we're sounding tough, we're trying to kind of just tell it how it is, really, right, mate? You know.
Upstart.
Yeah, so let's go back to Upstart. So here's the Upstart. Yeah, trickling down nice. Good short.
Yeah. It just, these stocks are so expensive. And when you get short, they give you 4 times the buying power when you're going long, but only 1 when you're going short. Tells you how they fix the markets, right?
Right, I mean, yeah, 100%. And yeah, just answering a question on dribbler stocks. I like the way that, because it does describe it. So you notice when Upstarts and that go, you'll see a lot of other stocks that are in that genre. Not necessarily the genre as in the same stock, but I mean in that dribbler universe. Like, should we say metaverse? Tend to get the same kind of silly moves going on, right?
So this is how they do it, because for the same buying power, you could go 4 times long compared to 1 short.
Oh, yeah, well, that's the other benefit people got to realise. So it's much harder to be short, and that's why when it falls, people aren't short because it's so expensive. So this to give you an idea of what's played today, right? So Apple's one of our main tradings for a number of reasons, because the big shops all are trading Apple. They use it. It's like a big part of the NASDAQ, big part of SPOOs, and you play off it as a big orders. That did 917,000 was its option volume today. 57% of that was calls, 43% put. So that tells you that the people are just looking to buy. Like, you'll see some of these. So as far as the bull market, it takes a while to unravel all that. We're still very much in a bull market mentality. Why do I say that? Well, listen to these numbers. AMD, 806,000 options done today. 72% were call, Madabi, only 27% puts. Tesla, 791,000, 57% calls. Space, which is Branson's one, what's it called? Virgin Atlantic, 72% calls. Nvidia, 618,000, 67% calls. Facebook, 587, 71% calls. Palantir, 446,000, 70% calls. Roblox, the one we traded tonight, 381,000, 64% calls. So a lot of these calls they're people buying them for earnings, like gamma plays, whatever you want to call it. Some of them could be protecting shorts. I find that kind of doubtful. That would be a large percentage. It would be more, the put volume is probably more protecting length. Not many people buy puts when we're this far down with vol this high. Vol was off today, but it's still very high, right? So that's interesting how quickly these things become, or they want them to go up, which also, if you look at that, that's the sentiment of the market and explains the positioning a lot. So it's important stuff to get your head around. And so we won't go through the actual numbers too much because we're not exactly experts on all that and don't pretend to be. We just look at the numbers as far as the volume. People all have different views on Roblox, whether they're good or not. What's going to be interesting is tomorrow how these gaps play. The gap down on Roblox, gap up on Upstart, so keep that in mind. Keep an eye on that optionality. There's going to be VIX. Remember, when you're paying that much for VIX to buy these puts or calls, it's got to go up so much, right? So obviously those puts are going to be worthless for the most, unless it really sells off or gaps down on something, which is a tough call. That would have to be some pretty serious downgrades, which they tend not to do when things gap up. And then calls, there's going to be selling to take profit on one hand, but it's also to recover that vol that if you own that length. Okay.
Again, I still think we're walking into a bear market because
that's what my point is. Behaving like a bear, right?
I mean, listen. We supposedly rallied because of what? Russia's not invading Ukraine. We all knew that was fake news, but even the fake news.
I like to use the term "wag the dog," but
yeah, exactly. Their intelligence. Their intelligence is that good, huh?
Right.
Intelligence work. But anyway, then Biden comes on and kind of disputes that. Talking about Article 5, like he's going to war and going to arm these people. Is like these are war of wars. But the market kind of ignored that. But look at the massive up move we had today. I'm still short.
Well, we'll walk it through that. So firstly, we're now on the S&P. So if you recall, we had we bought calls in the IWM yesterday. And actually, I got out of them way too early. Remember at the open, we were up 2-3 times on them. It was a good profit, but the IWM has been difficult lately. The Russell. And it's like it was me against machines. There's not even market makers in it early on. So I took profit, good profit obviously, but could have made more. And the other thing is, as just what I said about Upstart, the vol starts coming off real quick. Even if it goes up, if it doesn't go up at a rapid rate of change, that's why you look at your Vegas and all that, then you're actually going to lose. So there's that. So and we had a small long position in the SPOOs, very small. Pure technical. And then, so the news was not unexpected. As we said, we have people on the ground there. We kind of know we surmise what's going on. You never know. But it's pretty clear what's going on. To me, it's pretty damn clear that it's almost like the US wants a war. So when we say wag the dog, it means it's distracting, right? Why does the dog wag its tail? Blah, blah, blah. So two things are at play. The energy situation, to oversee all the bad policies. ESG is one with the change from fossil to that obviously wasn't planned out. It was used as a big political platform in the US, in throughout Europe in particular. So who else to blame? Got to blame Russia, right? Ukraine, Russia. So there's that angle. There's also just a distraction from the mess that is domestic politics in the United States, the division, trying to get things through, massive inflation, weak real wages, all this sort of stuff. You've got the mess that's just above here in Canada. You've also got, I believe, the most unpopular president in US history. I was told the other day he's more unpopular now than Richard Nixon, which was the previous title holder. So we've got all that. So what does America love to do? Loves to go to war, right? A lot of countries like to do that, but the US is probably the champion of that. The only one I can think different are totalitarian governments like Russia, China, or Maggie Thatcher with the Falkland Islands. So you think all that in the background, and if you do know what's going on over there, like, and we'll go through one specific example I can show you about the way the news is behind it or the news being manipulated. Now, that's our view on it. Doesn't mean we're 100% right, but it's a good thing. But anyway, we're traders. We look at how the market reacts. So if the market's really long or short or oversold and bought, you look at the order flow. That'll give you comfort in your positioning. You size it accordingly. As we talk through people like Ed Sakota and all these. These are big, heavy traders that have traded billions of dollars. We've been around that and unfortunately in those situations ourselves. So that's what we're trying to share with you there. Okay, so what happened today? We had that in the morning, and then the US has done its best to refute it. So let's just take a step back. We've had the Lavrov from Russia, Putin both say this. We've had the new Chancellor of Germany involved. And remember, this situation is about Germany more than ever because they stuffed up their whole ESG movement after stuffing up their whole end of the nukes movement, which we've talked about before. So they have a problem. They need energy. Other things aren't in play. Schroeder is running Nord Stream 2. There's many things in this you can go read up about. So that's all in play. You recall that they threatened Estonia in particular, which brought up about supporting or just sending arms to Ukraine, basically, which brought up memories for that part of the world, particularly Finland, Estonia, Latvia, Lithuania, of the betrayals in the Second World War between Germany with Russia. So that's all live around there. So then you get America coming in and popping in. And you remember, as we've said many times, the Biden name is not exactly well liked in that area because of the scandal of the Ukraine, right? So just think of all that. So all that's in play right there. And that's going on. So the whole Ukraine-NATO issue, that's something that's constantly brought up more by the US than anything, right? It's not, I mean, it is what it is. Ukraine's a divided country ethnically, but they're getting along. There's the right-hand side, if you're looking at the atlas. There's a big part that's Russian, ethnically Russian. And then you have the ethnically Ukrainian on the others, the majority of it, a little bit of mixed. A lot of it's to do with Ukrainian Orthodox and Russian Orthodox. So keep all that in play with what's going on, the time of the year, and what it achieved. Who wins out of this and who loses, right? So anyway, that being said, that's kind of the background you want to have as you watch order flow and levels. And we all know about the military-industrial complex. So I just wanted to go over that again because I keep getting questions about that all the time. What's going on?
The funny thing about this, what you're saying, mate, you remember, CNN, for example, hated Trump. You know, they never talked good about him.
No.
Right? But when he bombed Syria, they called him presidential.
Yeah, maybe you're telling me that. Which is interesting. So his one act of war was presidential. I mean, so what happens to a president being good in being peaceful? I mean, obviously Trump had quite a few issues, right? But so that's the other thing. I mean, we just see this constant distraction, with the January thing. And the latest thing we saw today was we've got nominations for the Federal Reserve. So we all know Jerome Powell and Lyle Brainard, the ones put up for first and second, chairman and vice chair. So what do? Just to create animosity, given, as we've said before, out of the ones put up, the one that a lot of people on both sides of the aisle and the country have a problem with is Rankin. And the reason is a lot to do with her comments about lending money to the fossil fuel economy and all this sort of thing. And keep in mind that you've now got a US administration that was begging Russia and OPEC to produce more. At the same time, at the other side of their mouth, we've seen all the war drums. It's just bizarre. And then and so they're begging all that. You've got, and I've seen estimates that they're going to be back at the high in Permian, etc., in a few months of production. And you got an energy secretary mocking that. It's just bizarre. And then you put up a federal governor that doesn't want that funded, wants it to go broke. Now, these are meant to be people acting for the people. It's bizarre to me, mate. I just can't get my head around it anymore. So why would you put someone and trying to get them all done together to sneak them through, I guess, is that the thing, without proper debate? And you're reading that they won't answer questions. And the problem is, it's so partisan in the United States now, you don't know who's Arthur from Martha sometimes. Fact or fiction, right? So, but the bottom line, it's just constant distractions. So be aware of what's going on. And then trading through that, these are the kind of news bombs that can hit. What happens? So I'm guessing that it's a status quo remains until they can replace. So I guess that keeps Powell and Brainard in their positions, right? But what happens if it doesn't? What happens then, right? What happens if... so they're the little things that we got to be aware of that's going on, and it's constant. We get into a situation where they call old Joe Rogan misinformation. Well, all I see is misinformation non-stop on everything, don't you? It's just bizarre. So all that's in the background. So see through that, and so that's why we pulled in the sectors we trade are very tight until we're confident in that. And the reason we're kind of going on about this is what we're talking about on desks, right? And so what you got to be careful is having a influencing your position politically. So if you vote left, right, or brindle, that should not infect your decision making. And I mean infect, because it will infect it and you'll make decisions you shouldn't be making that can be hurtful to your wallet and therefore your confidence and your sentiment and all that stuff will start happening. And we'll go when we go through oil. So anyway, pretty clear. Today I based everything on, pretty much on we had the long overnight. We got out at the daily Tenkan, so we did well, but not a big position. As I said, we bought off this line, which actually I had to reboot everything, so I'll put that back up in a minute. But you can see the sort of thing that's going on. So when you use parallel or median lines, what you're looking for is replication. Now, I've redrawn, so this is the daily. And if you recall, the original was more dramatic here, and we've come back into it. But this is fine to redraw this. In fact, I would say this is more correct, okay, because you look for more pitch. And you've had the advantage of hindsight, obviously. But what we had here was 6.8 in the breakup. That was what our basis, and if you go to the weekly, was still way off that, right? If you look over here on the cloud. So what stopped it was this Tenkan, and Cajun, right? And if I put up the cash, this is actually the futures contract, same situation, not always. So that was our basis of why we got long and short. We sold into the close. So what Madavi was talking about before was this was the silliness that went on, right? Today's price action. So this is Biden talking, I believe, where basically it was all big war drums, Russia's bad, Russia's this, all that, right? The sad thing is, if there is truth to this, it's the boy cries wolf, right? But what we're looking at and once that selling was done, because as we just saw of all the calls, there's a big, every sell-off or bounce, it's more a bounce. So what's happening is instead of buying on support, people are buying on rallies. That's why I made that comment a week or so ago. When people are telling you don't catch knives and all that and just wait to see what happens, well, you're missing your opportunity where most moves happen. So you go to liquid and you know where you're wrong, right? And you size accordingly. Be very wary of the bloody advice given out there by non-traders. It's scary, you know. But so that was this news. And so here P&L on not big positions on the spoos was getting whacked around, right? So NASDAQ was even more dramatic. So that's why you take some in on level. This is a 30-second chart. So let's just trying to highlight that. But let's go to a 3-minute that we actually trade on. And you can see here quite dramatic too. So hopefully we're giving you some tips of what goes on some of the desks and how it works. But very fast trades. And you can see a lot of them are people not wanting to get caught with a position more than anything. So they're reactionary. But you need to be proactive where you knew that's a big result. You know where the previous lows were. So you just don't go for... I put a tweet out there earlier when I was on, a quote from Paul Tudor Jones, one of the great traders, not to be confused with John Paul Jones from Led Zeppelin. But anyway, he made a comment that he had everything on cotton and nearly blew it all up. And then he realized, right? So you don't have to put it all on red or all on green. You have systematic, and you trade with what the market gives you. And so you always want to stay in control where you can, or you will never have an edge. So like I said earlier, I took profit way too early on the Russell this morning. Here's what it is. What's better, to make money or not as much, right? And keep your mind right for the next one. Okay, let's have a look at NG and oil, and then we'll look at Madavi's in the middle of some trades right now. So crude was pretty straightforward selling. As we've been running this a lot in our weeklies, it comes off this weekly channel, right? So that was yesterday. We spiked up above it or spat it, back under it. You know your level, and you got your medium line here, right? So you don't have to short here, and you don't have to do anything. We're just showing you what we see the high probabilities are, right? On the daily, you saw this today. Let's blow it up. So we came down and we tested the tanking. So the shorts that we had, look what it did. It held the tanking and held the daily channel, and we're just sitting above it. So that's more your short-term trading. Longer swings, you can see all this, right? And people were asking me, yesterday, why the oil stock's down and oil's up? Well, firstly, there are people who are worried about demand destruction. It is $95 yesterday, right? And secondly, people like to take profit that are traders. They're not all in. And you're wearing, if you're a commodity trader, oil does one thing. It can surprise you. Geopolitical impacts, whatever. So bear in mind of that. Anyway, what did it do today? So this 30 seconds, that's way, way too fast. Unless we're showing you something. Unless you're pure scalper money flows. So you can see what it got down to today. So we looked up here. I showed you here the tanking and that. Look what it got down to, peeps. The 08 was that spike. So you had reasons from a day trading point of view, or trading, to buy here, sell puts against your position, however you trade. but do something that's comfortable with yourself. And hourly, you can see it, and look we came back to test the the hourly tank. We're right under it. Look at your Murray. Right, so just put all that together. Let's look at Natty. So Natty, remember, is all about models and weather and optionality. So we've spent many time, hopefully it's sinking in, that these things have massive hedging interests in them. They're not just all speculating, and that's commodities, right? Particularly energy. We all use energy. That's why we have a little bit of an inflation problem going, right? So we bounced off that level. We had that spit. That's why spits are such powerful things. Spit of a spit's even more so. But if a spit, think of it as a false break. Everyone gets it some way. Here, you can bet you, if you look at the hedging lines, we talked about this, puts went on, right? Calls were sold. So we get these exaggerated moves. And you get a move in the model. So let me think, you can get a move in the model. Right, and yeah, we will mention API in a minute. Thanks for that. You look at the model, the weather models, if they change overnight, they then feed on it. People got to cover their deltas. People are worried because of the environment. If all you're hearing is the people that are meant to calm you, like using words to scare you, just think of what's going on in boardrooms and all this. So that's very classic there. On the short term, if you trade it, again, this is 30 seconds. Let's go to 3 minutes. So you've come in today. Remember, one of the big things is when it gets over these false breaks. So think of this on a long term. Go to short term here. It means the selling becomes exhausted, right? And then you had this big volume spike. Remember what that was. Look at the time of the day, models, etc. Weather models, things like the LNG reports, production reports. All this stuff is relevant, okay? So what we had was, we go hot, we had cold trends come back, boom, they got to buy them. It's all about supply and demand. So we got that sort of stuff going on. That's also relevant and being affected, even though this is a domestic product, it is getting affected by what's happening internationally, in the Ukraine, etc., Germany. So let's go back to crude real quick. After hours, you can see we're trading 92.10. As far as the API came out, it came out as a draw of 1 million barrels for crude. Draw of just under that, 923 for gasoline. Distillates, a draw of a half. Cushing, which is a relevant one because that's a hub for WTI more than anything, was a draw of 2.3. So these were supportive of oil as far as something like this, but really at the moment it's geopolitical factors of it. So honestly, we're getting a constant push of that. So we'll wait and see what's going on here. So sorry we lost Madabi there for a minute. There we go. We were just going through the oil and gas situation.
Yeah. I was listening. I just hit my earpiece.
Oh, okay. So let's have a quick look at NASDAQ, will we? So I think we're covered on oil and gas, everyone. I hope and I'm trying to give you the perspective of more what the larger traders will do in the perspective, because that's what runs the markets. You know, that, and then, not saying they always make money, but that's what order flow and all this, and they just have a bigger axe to grind, basically. So you want to look at that. And in these violent markets, you want to use as much help as you can get, and avoid the pitfalls, right? So here, let's just look at NDX. Do you want to look at the futures or the index for NQs? Let's look at the E-mini, the NQ futures. So that's that. Let me just get all this up, punters.
Yeah, take your time.
So that's the reason why, and that's why we choose to also define the ilk of who you listen to and take advice from, because everyone wants to develop at the end to a trader and investor, or really to an investor at the end of the day. We don't want to be trading our whole bloody lives, right? So we've got the 3-minute, 1 day, the 1 day, weekly, and hourly NQ. So let's work backwards. So we didn't quite hit that daily channel, but this is what stopped. It's been bare. And well, I didn't do anything on the NQs. The only thing I did this related was the Russell, because we noticed it wasn't going down. So I bought those calls. And to be clear, I bought out of the money calls. I bought the, just to be, I don't lead you astray, I bought the, which ones did I have overnight? So I had the Feb 18 205s. We owned them at 28 cents. Right? And I think they closed about 19 yesterday, so we're down a little bit. Then they opened up, and so we started selling them in the 60s, 50s, I think, actually, because we had a lot of them, and there wasn't any market makers. So good. So we're not risking a lot, and we got out basically in the 60s, and it went higher 70s. Remember, we're also selling two factors. Was this going to hold and come off like the Russell has, or will vol if it goes up? Vol. Then it actually got in the money, so it held its value. But I was long gone by then. So we're not overly risking, being very specific, and we're sizing it appropriately. We're not putting much of an account on there. I've got a buddy who does that really, really well. One day, I maybe ever talk him on coming on. It's hard. He doesn't like a lot of publicity, so we'll see. But anyway, so that's the sort of trades you do, and you just got to have them out at the right date, that if it's more than one or two, and you don't have them all the time, right? So that's that trade. So that's weekly on NQs. Daily, you can see the same pennant forming, right? There's that same line. Murray, there's lots of room either way on this, because this is so congested. Basically, it went up for so long, this market, that we still have so much room. Either way, if it holds here, you've obviously got all this, the new highs. I mean, it's possible, I guess. And then if it doesn't, this would become a medium and you'd come down here somewhere. So, okay, let's look at the day, the hourly. Held 1/8. And this was Europe. Basically, the low came in Asia, and then when it took off when it hit Asia. Europe, when Lavrov made his announcement, or was reported anyway. So that's that move. That's a 200 and something handle move on Nasdaq. Then it came down. What did it come down? 574. So 150 handles. And then at the end, you can see this movement here that we went through on the SPOOs. This was that one where Biden started talking, right? So it came, or was that this one? Might have been this one. It's hard to bloody say it. What time is it? 16, so 18. So it would be here. So that must have been Biden talking. Do you want to walk us through the Nasdaq, mate? It was choppier than my one. I was a SPOOs.
Basically what I did is, when the market started taking off last night, I did a pair trade. And I went long the SPOOs, and I went short the NQs, thinking it was going to top out somewhere. I just didn't realize how big the run is going to be. So the biggest mistake that I made is when we got a little pullback, and probably like midway through the morning, I kind of took off my pair trade and kind of went more short, and that's where I started taking on the damage. But I'm still holding my shorts. I think there's, tomorrow we're going to be back in. The war is going to be back on after what Biden's speech was like. So I expect to retrace down. This is just a bear market, one side rally, I'm hoping. We'll see. We'll see how that works out. So it was really choppy today, and, a lot of head fakes. That's why I didn't want to trade it as much as position it, which normally it would come back, and this time it didn't work out for me so far.
Yeah, it's a weird market right now, and it isn't trading very much like a bear market where people keep trying to, as we saw with those calls, that's why I wanted to show those calls. And they weren't just all earnings out today. Some of them are just dribble of favourites, or they got earnings later on, or they're big ones that are market maker favourites, right? So, I mentioned Apple in there, Facebook, Tesla, AMD. So every type of trader's in these sort of stocks. So it gives you an idea what's going on. So I think we went through everything there: oil, gas, the major markets. Again, so what? Hopefully, what we're trying to get across is more what the market's saying, the sentiment of the market, and how it reacts. And so when it gets too difficult, you size down accordingly, as Sakota would say, as we said. You size up accordingly. And you take advantage. You look at you've already got your pre-plan. That's why we do that weekly structure for all the major commodities that we look at anyway, the major currencies and major markets. So these things are predictable as time and price. That's why we look at GAN and all that. And then, so we have that as your framework or your bias, if you want, to be long or short. And then you trade almost like an algorithm when you use Murray and Ichi, but you want, so where algos get it wrong, we're using antiquated technology tonight because of the problems we had with the room. So we got Madavi calling in on Apple, so we're sponsored by it. No, that's all right. It's the best we could do, right? So I got off track. So you want to get the sentiment of everything, and I think people exaggerate. I don't think people were out there saying it was the end of the bloody world. It's just political stuff going on and wars. It's not the end of the world. And I think anyone we know isn't talking about the end of the world or the start. It's just so the hyperbole out there is quite spectacular from people that I don't think they're doing that, or is that the reason they do it? I just saw a tweet go by. I just looked at tweet of from what's his name, Chanos, saying about Upstart. Let me see if I can find it again. Yeah, so he's out tweeting about Upstart. I'll just read them to you. He go, is it just me, or is the Upstart 1Q and FY 2022 guidance below the 4Q levels on profitability? He's a little bit cynical, right? So he says the Upstart FY 22 revenues guided up 65%, but adjusted EBITDA is only 3%. So that's to $338 million. 1Q adjusted net income guided to $20 million, flat year on year and down sharply quarter on quarter. So obviously he's calling bull crap on it. So he's like you, mate. He likes your position. And that implied $238 million in adjusted EBITDA for 2022 is below, this is the important thing, the $255 million consensus estimate on BBG. And I got to say, this bloke's pretty accurate. The only one I saw him really get it wrong was, we both saw him get it really wrong on Tesla, right? But he's quick to, if he's wrong, he'll explain, and it confuses him. So, not saying he's 100% right here, but it's interesting that a bloke like that, who's a notorious big shorter, is making those comments. So there's a lot of people think Upstart's a total load of, right, particularly in this environment. So keep that in mind with the move that it's had, and we'll have a look at that chart one more time. And you can see it's just been dribbling down. Again, true dribbler stock, this one, right? So there's multiple uses of the word dribble when you come to dribble stocks. And if you look at the weekly, you couldn't get a better waterfall, could you? Look at that. Unbelievable. $400 to $70 in October, start of October to now. So that's 3 months of destruction to lose nearly 3/4 of your money if you're in the top there. So that's why we kind of stress a lot of this. And we copped a lot of flack a year or so ago when the market kept ripping up, and we would trade these things on earnings, but we would refuse to own them overnight, right? You don't get it. This market's different. Did we get called boomer? Isn't a boomer anyone over bloody 30, it seems. But whatever, anyway. So the point being, when these things fall, the destruction's so fast, and generally, if you know your Elliott wave, the guy buying here, if he's in late, unless he's a punch trader, he's not doing this. But all these people are buying dips and dips and dips. That's why these things happen. Then they run out of the cashish, right? And then if the company doesn't make money, they do secondaries, or the owner sells his holdings, etc. You're up against all these sort of things. So just keep that in mind. What did Airbnb do at the end? Here we go. 628.
Yeah, it's holding pretty good actually. You know, Roblox it's coming down. I got stopped out of that 62.80. So.
Yeah, I just did that one scalp on that. I mean, when you I saw an interesting comment on that, comparing it to Activision and Take-Two. Both of them have really good franchises and they make money. Well, Activision's getting bought out, and Take-Two is buying. Who did they buy? That gaming stock for New York. Do you remember it? Zynga. So they're buying Zynga. And the comment is that at these levels, Roblox is still overvalued. I mean, I'm surprised they don't make money. Every kid I know, younger kid, plays it, right? But obviously, I guess it's like a lot of these things if you don't charge. So I think a large number of their audience base doesn't pay for the service. I don't know. I know I don't let my kids bloody spend any money on it, but Madavi will probably have something to say about that.
What? Sorry about that.
I said I don't let my kids spend any money on Roblox. They always played it for free.
Yeah. I spend a lot of money on there. I always get on my Meta World. That's You're a kid. I'm the kid I got to worry about.
Yeah, we do. We're doing our best to turn back time, as Cher would say. Is it Cher? I think it's so.
Man, I'm still 18 years old when I'm in the Meta World.
Yeah, I mean, exactly, right?
Yeah, baby.
Well, so tomorrow we're going to have, it's kind of a big day tomorrow, right? So let me we're so disorganised because we trade pretty actively, and then we kind of lost everything. We had to, and we thought the problem was something it wasn't, so we rebooted everything. Missed out some good trades. But anyway, just to give you the final numbers, Dow was up 422, Nasdaq up 338, SPOO's up 69, 10-year close at 204. All of a sudden, that doesn't matter, huh?
I mean, the buying today reminds me of, it's like the sheep following the sheep off the cliff.
Yeah, I mean, it's the lemmings, right? I mean, so let's take a step back. The whole reason we're down here, the collapse really started after the minutes in January of the December meeting from the Federal Reserve. Right? Remember, we hit record highs at the end of the year. So that was all about raising interest rates, high inflation, credit becoming difficult. So what did we get today? And it's all on the Trades Community site there. We got PPI running at nearly 10%. Get your head around that. 10% of input prices. So the company's got to pass that on, right? Or that becomes higher inflation. Otherwise, they're losing money. They're going to lay off staff. There's pressure on wages. So, all these things come to bear. The bond market, so currencies and bonds kind of run the whole show in reality, right? They've put the 10-year is over 2%. So that's what we've been watching. So let me look at, I put out these earlier. So that's what I thought it was. It was up 5 basis points today to 205, right? The dollar was a little bit softer, as you'd expect, because that's been a safe haven with what's going on in Ukraine. And you saw gold pull back about $13, but it still broke up that weekly level. And we want to see where that closed on the week. And so year to date, I mean, these numbers, that was the other number out today, was the Empire State, came out at 3.1. That was meant to be 25. So we got a crap economy with really high inflation, high producer inflation and consumer inflation. I mean, let's buy that market, hey? So in other words, everything's reactionary. And I would garner to suggest that a massive amount of people playing these markets wouldn't even know where the Ukraine is, right?
No.
I mean, I know they don't know where bloody Estonia is, but I'm guessing they don't know where. I mean, in all seriousness, so they don't know what's going on. They don't know probably what's gone, and there's soundbite after soundbite. I mean, I saw a report that Zero Hedge got brought to task by the U.S. administration because they basically were saying they were acting for the Russian Defense Department or security in reporting news. It sounded very familiar to that whole fake Russian, what was it called? The Russian hoax or whatever. I mean, it's just if you don't fit the narrative, you get shut down.
You're a Russian sympathizer. That's the word.
Right. So keep an eye on all this stuff that's going out there. So more than ever as a trader, you got to watch the money. You follow the money and follow the order. And if you're totally at lost, be like us and trade a minimal number of positions, right? And it doesn't matter if you get out too early. It's better not to get out too late, right?
Listen to this. You had the president on, right, with a market half hour to go, talking about invoking Article 5. I mean, and last time I checked, Ukraine's not even part of NATO.
Right. So, and that's the other thing, right?
Like that. So listen to this, okay? You got to remember, there's a lot of combating fields where the Russians and the U.S. are both on. You got Syria, you got Libya, you got all these places, Africa, whereas Russia and United States soldiers are. So if the United States is going to start doing that, Russia's just going to turn around and do the same. They might not get hit in Ukraine, but they're going to get hit in all these different spots in the U.S. is on, and there's a lot of them.
Well, and so there is one interesting conspiracy theory out there, and this one's interesting. So we know the situation the world's in. We know the power makers. We know all that. We also know the power of the military-industrial complex, or industrial-military, whichever way you want to say it. So there's a theory out there that the powers that be, a lot of them, they make a truckload of money from that. They can control people. Omicrons, so COVID's kind of run its course. Omicrons, the weaker version, it's only the upper respiratory, not the lower or something like that. I'm no doctor, but just going what we've read. So anyway, we know that more people get it, less people die, etc., etc. It really, we all know it's been since the very first Rona. It's not the headlines.
It's fading away.
So there's one theory out there that Russia, America, France, England, all got together and said, shit, boys, what are we going to do here? We got to create some hostilities. Okay, yeah, why is that? Oh, we got to sell a lot of guns. We got to, whatever it is, control the masses, get our people back on site. So you look at it first, you go, yeah, whatever. So you see Biden, what did we say, the most unpopular president ever, United States. We all know what's going on with Boris over in England. Big fella's had a bit of a shocker. Macron, same problem over in France, constant protests. Putin's been having problems with his support too of late, first time in a long time. So all of these four leaders, Putin's obviously out of those four by far the most popular at home. All those four countries also happen to be the world's biggest arms manufacturers, right? So at first you go, a load of rubbish. And also, if you notice, Germany's the other player in the mix there. It all comes after Angela Merkel's done and dusted and retired and off drinking snaps or whatever. So at first I thought, and I went, yeah, maybe there's some legs in that. But I'm not so sure that Russia would be on that same thing, given the whole Russian hoax. So I'm not a believer of this. I'm just telling you what's out there. And the biggest wag the dog, as we've said, is twofold. One, the energy thing, and two, needing to shore up hope back home, You got to always make someone the bad guy, and war's a good way, particularly when people are depressed. We've seen the sentiment numbers around the world. So all that's out there. So what a world we live in. So in other words, change what you can change, leave alone what you can't. As a trader, follow the money. Look at what's there. Try to size accordingly. If the spreads are too wide, which is when vol's too high, ignore it. Unless you're a market maker selling that vol, right? Sorry?
These big moves, believe it or not, there's a big destruction of wealth going on right now with these choppy moves.
Right.
Down and losing on both sides.
Yeah, so avoid that. And so I get a comment, well, shit, I've lost my ass. And that's exactly, I'm quoting you how someone said it to me. What am I meant to do? Because they've kept stocks, because people had tell them to keep stocks. Have you noticed trades have become investments in the last 3 months? Right? They didn't start off as investments. So the best advice to that, if you got a position, you can sell vol against it, you can get out of it, or you can trade when the situation's set up, and perhaps if it's a position you like, if a company you believe in makes money, pay dividends, obviously use advantage if you're not over-averaging and putting yourself at risk or borrowing to do it. There's alternatives like that. But the key is to be mentally sound with whatever decision you make and happy about it. And don't rant and rave and all that sort of stuff and hold yourself out to be someone you're not. Huh?
And here's the problem, right? So people look at this like, oh shit, see, I should have never put in that stuff. It came right back, just took a week later, but people they forget all the agony they went through. And one of these times they're going to leave it.
Yeah, it keeps going, right? Yeah, I mean,
that's the problem you're going to run into. That's what they're doing, people making think that they can come back.
Yeah, look at this Upstart chart we looked at, the weekly. That was 400 3 months ago. It's 135. It looks massive because it's up. What does it say? It's up right now.
30 points. It was up.
Yeah, $30, right? But look at how much it's down from here to here. So, and if you were averaging all the way down, I mean, you had a much bigger position than what you wanted. And you still probably know, unless you're bored here and, but that's not what happens, right? Averages, so they're being told that's what's to do. And now you got blokes saying, oh, just sell the rip. Well, these things can rip in your face too. Look at this. So there isn't any way. You got it's horses for courses. A position that suits you. The personality of a stock or a future that suits you. There's some stuff I just don't trade, do I, Madavi? Because it doesn't suit me.
Yeah.
And vice versa.
I'm different. I like the crazier it is.
I got Manatee for crazy, I guess. But, Yeah, if I don't... So we're battling to have an edge in whatever you do, particularly if you're on your Pat Malone now, so you have a good network around you of serious traders, news, people you can trust and react. And that's a very, very big thing. You need to be able to trust those around you that you're running as a team and advising. We've had problems with that of late, and we've fixed the situation. But that's very important if you're a trader. And it means everything. News sources, people you can rely on, people aren't going to spin, people actually know what they're talking about. You got that. You then have to be able to trust the market you trade. So
if the guy tweets more than 5 times a day, probably not the guy you want to follow.
Well, if Johnny tweeted once a decade, right? But in serious, so if you're in a market that you don't trust, and there's plenty like that. So gap downs, gap up, and you're not comfortable with, don't trade it. Or certain times of the year, don't trade it. If there's a market that reacts differently around earnings, like I don't have positions in earnings for a start, right? I don't trust what these corporates will come up with. There's certain ones you do, I'll take that back. But anything of the dribbler persuasion or punter persuasion, just look at these moves we're going through up and down tonight on Roblox and Upstart. You're the wrong side of that, you can blow up. Well, you've certainly lost a lot of money, which then affects your temperament, right? So yeah, be very wise of all that.
Just imagine, right? Everybody trusts Boeing, right? Boeing's supposed to be like the best airplane thing. The FDA just took off they used to be able to certified planes.
Oh, the FFA, not the FDA, yeah.
The other one they're doing too, the jetliner or whatever. So they can't sell certified none of the planes anymore. That's it. That's how much trust these corporations have lost with people.
Right. So, there's lots of levels of trust you want to be comfortable with. And so, basically if you're not comfortable, don't do it, right? Don't go into that market, and certainly don't rely on others to make... a lot of people do that in today's day and age in everything because they don't want to take responsibility. But you really got to take responsibility for trading and investments. And you'll still get it wrong. That's what happens. But you want to minimize your losses and maximize your opportunity, right?
I think we scared them enough for today.
Yeah, I didn't want to sound like the devil's come to town. But I just try to answer, because we're not on social media that often. We kind of go and burst. We try to get the news out there early, sometimes during the day, if someone sends me something. But so there's a lot of stuff, and I try to round it all up into one. Not meant to scare the crap out of you. Scared straight, right?
Yeah, I try to outsmart the market today, thinking I know better. Boy, did it wake me up again. Damn.
Yeah, that's why I use technicals, because it makes me get out. Here's a good example, that IWM I mentioned I got out too early. Well, I could have got out of a short on that on Friday for a really good profit. I kept it for the weekend and ended up losing on it, right? So horses for courses. Now that's a little bit different to a straight out futures trade because you know you're lost when you buy an option. But again, you got to, so there's an art to it too, and you're not always going to make money, but you got to give yourself your best chance in these markets to take opportunity. They're not always like this, right? And we're not blokes that get these upswings on upstarts because we're just not going to be in those things and hold them. That's not our risk stop management. We're not punters and dribblers, right? Unfortunately, sometimes there's a time to be that. So wave 3 will take advantage of that, not in 5. What was that, mate?
I'm trying to reverse my mindset. Instead of going long, I'm feeling more comfortable with a short, knowing that that's the direction we're going to hit in the not too distant future.
Yeah, so that's the most likely scenario, but you never know, right? So you always got to assume that there's always a possibility of unexpected,
One thing that has never failed, ever since I started trading, is when the Fed raises rates, eventually this market dumps.
Well, yeah, we're raised.
That's been like the king. You know, it's never lost. It's like age. You know, Father Time always wins.
Right. So, I mean, that's a scary thing, right? So, if you think what's going on with these Fed hearings, it's just silly. And your pal, he's probably going, what the hell? I've got 10% inflation. You're still playing politics, right? He knows he can't raise too far because it's going to kill the credit. And then on the split side, if he doesn't raise at all, I mean, and so it's not, he's acknowledged that he can't fix the supply. So a lot of these things are sentiment things anyway. Banks aren't lending anyway, right? They're sentiment, and he's got to somehow balance that sentiment out. So think more about that. And
the banks do lend, but these are corporations who are going to now, especially these tech companies, the cost of money is going to be a lot more for them, so they're going to...
I meant to more the herd, more Main Street. Yeah, they'll lend to the chosen people, yeah.
They're probably going to spend more, but these tech companies who are always borrowing money, and they're not going to be able to have access to as much money because it's going to get harder because the rates go up, the qualifications, they're going to have less of it.
Yeah, so they're going to have to do secondaries and stuff, yeah. And they're going to be, and people are going to be less likely to buy them.
So the secondaries are going to be harder for them to do because their stock price is down to 50 cents.
Right, so you got stocks that are way down, so they've got to be, so again, sentiment, so people are going to be reluctant to buy them, right? That's the funny thing. We talked about this before, Tesla did a great job of their secondaries. Musk did all that over $1 billion, I mean, over 1,000, whatever it was.
But there's not too many Musk running these companies.
No. But the point I'm making is he was doing it as they're ripping up when people want to buy them. Not when he had to. It's kind of that saying, you don't buy puts when you have to, right? Because then they're way too expensive. Same thing, it's the reverse in secondaries. If you're doing them when you got to sell your soul on your company to keep your company going, right?
I've never seen a guy be able to dump almost $20 billion in stock and people saying they love it.
There's a few of them. With Tesla?
And Tesla.
Yeah.
Masterfully.
Well, in fact, they mocked him for selling it, didn't they? Because it went up after him. Oh, what's he fucking...
Going to do it, and people still bought it.
Yeah, and...
They can't get mad at you because I told you.
Yeah. I mean, he's certainly forewarned.
So he tells you stock's overpriced. He tells you everything, and still people line up and get it. That's a master right there.
And they still hate him. I mean, he was up front with that.
The guys who hate him is the guys who shorted the stock.
Or even Dio, what's his name? Shanus doesn't hate the bloke. He's like, oh shit, he got me, sort of thing, I don't know what he says behind the scenes, but
He didn't get him. He got him so bad his quarter went negative.
Yeah. But what's impressive with that guy, he just moved on, found other stuff, made money. That's why I shared what he said about Upstart. But
he knows when he's met his match. He's like, I can fight this, but I can keep on losing or just move on to the next one. It's a lot easier.
yeah, well, just before we go, I just saw the Japan Reuters tank index drop, and manufacturers' mood is to an 11-month low. That's significant, right? Japan's one of the world's biggest manufacturers, and their manufacturers at 11-month low of sentiment. So that's a lot to do with this. So, yeah, we have the cycle thing, the supply thing, but that's been going on for a long time, and it's coming out of it. But the politicians, as Madavi said earlier, it was Omicron. Then it becomes cycle. Supply cycle I'm talking about. And then now it's Ukraine. So it's just constant barrage and negative. And then you look at what's going on in places like bloody Canada, mind-blowing really, and France. And so there's all this stuff. It's like a massive powder keg out there. So keep that in mind if you're positioning people.
I mean, how would you like to be a part of NATO and you got some crazy old guy invoking Article 5 on a country that's not even part of NATO? They're talking about it,
Yeah. Well, it's interesting when that comes after Trump, who was all meant to be the crazy guy with the button, right?
No. You got to remember, Trump was the most presidential when he was bombing shit. enjoy CNN anyways.
Yeah, CNN, that bastion of solid news. So on that note, everyone, so tomorrow, remember you got a bunch out, you got minutes, you got Fed talkers starting to talk from now to the end of the week. You got the EIA out, I gave you the API number. You got retail sales out this week. You got a bunch of stuff out in the next few days. You still got more earnings.
I'm going to give a hint. So there's a black swan we're not seeing. It's going to happen sometime in the next week.
In the week? Wow. That's a big one.
Yeah, because just the markets are moving and so much. They're just like, they really put the extra sauce in this. Maybe I'm wrong. I'm not saying there's definitely, I don't know anything. That's how I'm feeling.
It is moving kind of weird. So tomorrow we got the mortgage index in the morning, retail sales. So that's going to affect bond markets. Watch how bond markets react. And we also got import and export prices. So watch that for inflation. You got industrial production capacity utilization out tomorrow. If they're anything like Japan's one, they're not going to be too pretty. You got the housing market index. Remember, U.S. economy, and we all rely on that, a strong housing market. And then, of course, you got the EIA. We also have tomorrow, this is going to be interesting, mate. We have a 20-year Treasury bond auction up tomorrow, and it's at $19 billion. Not massive. Whoever thought $19 billion wouldn't be massive? So you got to bid out tomorrow. Keep an eye on your bond market. Keep an eye on your Forex market. And also gold is starting to send you signals too. So watch these markets. The thing that would worry me if I'm a gold bull is Goldman's upgraded their target last night. So I tend to think, oh boy.
It's coming true. And hey, I love gold.
That's why I thought I'd finish with that. So we didn't want to bring too much fire and brimstone. You can get that at your local church on Sunday. That's not what we were trying to do. We're just trying to, I kind of take umbrage, and by the end of the day, we're pretty worn out. We trade pretty heavily and actively, and we have a pretty intensity when we trade, and we relax after. So it does.
And I can be biased too right now.
Yeah. So we're just trying to pass on that. And when we're unsure, guess what I do if I'm not sure? I don't trade, right? But all the like constantly. I mean, but there's good stuff out there. I've seen a lot of blokes I know make a ton of money over the last week in stocks, futures, bonds, etc. So, that's about it. Johnny's enjoying his sabbatical down in Mexico right now. Do you think they let him through customs?
Killing it. Subscribe and hit like.
Yeah, so hit that like, subscribe, share it if you like what we're doing. If you don't, tell me very gently on a DM or something. I'm very sensitive. Okay, see you people. Bye now. Thanks for your support. Thanks for the questions. Enjoy.